Many people are anticipating an economic calamity if Congress fails to act on the debt ceiling. So what should an investor do? If history is any guide, we have little to worry about. Congress has raised or suspended the debt ceiling 80 or so times since 1960. But if the past year and a half has taught us anything, is that we should expect the unexpected. That said, the odds of the U.S. defaulting on its debt are quite low. Not zero, but low. The current crop of politicians likely learned their lesson during the 2011 debt crisis, when the S&P downgraded the U.S. credit rating and the Dow suffered a 5.6% one-day drop. The senior politicians back then were Pelosi, Biden, Schumer, and McConnell, and they're all still in charge now. So if we approach the edge of the default, they're literally going to back off. They've seen this happen before. For those curious as to what the debt ceiling actually is, here's a little background. The debt ceiling was put in place in 1917 to allow governments to borrow money to help pay for World War I. It didn't turn into a political issue until 1953 in the Senate battle over funding the construction of the U.S. interstate highway system. Secretary Yellen is pleading with Congress to raise the debt ceiling immediately, warning that if the U.S. runs out of money on October 18th, and if Congress doesn't act, we could be in a lot of trouble. In the op-ed for the Wall Street Journal, Yellen writes that if the debt ceiling isn't raised, almost 50 million seniors will stop receiving their Social Security checks, U.S. troops will go unpaid, and the U.S. will emerge as a permanently weakened nation. She warns of an equally dire financial consequences, the country falling into recession, millions of jobs lost, with a likely increase in interest rates affecting almost every citizen who wants to purchase anything traditionally bought with credit, including homes and cars. Not raising the debt ceiling would destroy the U.S. reputation for creditworthiness while hurting the U.S. dollar's standing as the world's reserve currency. Contrary to some opinions, it would not reduce government spending. 97% of the debt due is for expenses incurred under past administration. So, what is an investor to do? If a temporary drop in your portfolio of 20-30% is too much for you to handle, then regardless of the political climate, reducing your equity exposure could free you up to make some rational decisions in case the market pulls back. So, most important thing is don't panic. You don't want to sell everything. This is government defaults. These are going to continue to happen. Talk to your financial advisor. Make sure that you have some stable investments in there, stuff that's essentially crash proof. Millionaires and central banks are turning to gold. This is their option right now as a hedge against political economic calamity and to store their value of their wealth. And maybe you should look into it too. Give us a call if you're interested, 877-646-5347, or check out our website at noblegoldinvestments.com.
If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open, and we're happy to answer any of your questions.